In this video, I'll discuss the steps and the 7 dividend stocks that can give you thousands of dollars monthly. We'll go over each of these stocks in detail and explain why they are great investments in your portfolio. Welcome to Financial Flipside, where we help people with their personal finance and tackle everything about finance and financial literacy. To watch related videos and content, hit the subscribe button and the notification bell to get alerted when new videos are posted. For clarity, let's define stocks and dividends so you can understand everything that will be discussed in the video. A stock is a type of security representing ownership in a company or a corporation. It can be bought and sold on the open market, like other financial instruments such as bonds, commodities, and currencies. The demand and supply in the market determine the price of a stock. When more people want to buy than sell a stock, the price increases. The price goes down when more people want to sell a stock. Dividends, on the other hand, are payments made by a company to its shareholders. They are usually paid out of the company's profits and can be in cash or stock. Dividends can be paid out regularly, such as quarterly or annually, or they can be paid out as special one-time payments. By receiving dividends, shareholders benefit from a company's profits without having to sell their shares. Be wary of high dividend yields, as they could signify dividend traps. The dividend yield is an important metric used to measure the performance of a company's stock. It is calculated by dividing the annual dividend paid by the current market price of the stock. This metric can be used to compare stocks in different industries, as well as to assess a company's ability to generate returns for its shareholders. Dividends should ideally sustain long-term, so investing in stocks with sustainable dividends is advised for a safe and secure investment. Companies that offer high dividend payments should be assessed carefully to ensure they are sustainable in the long run. Avoid taking a risk with dividends that seem too good to be true, since it could be a dividend trap, or that offers high dividend yields, but in reality, the dividend is unsustainable. Now let's dive into the 7 stocks that pay dividends that you should consider including in your portfolio. Take note that all the prices and dividend yield that will be mentioned in the following video is based on the market price at the date of the recording. If you will be watching this later than the month of the upload, you can check the prices yourself. It is just as easy as searching what the meaning of a word is. You can search company name, current stock price, and its dividend payout and yield. By doing this, you can already see what you are needing. The first dividend stock is from a company called PPL Corp. This is an electric company that offers a dividend of 96 cents per share yearly, which makes for a yearly dividend yield of 3.36%. This provides quite an interesting return on your stock investment. At the recording of this video, the current market price of the stock is $28.49 per stock. Reports suggest that their dividend payments have been steady during their investing journey, but in case of an economic recession or a period of economic decline, leading to a decline in revenue and profit, there is a strong possibility that the dividend may need to be reduced. The testimony of others indicates that the stock has remained steady over time. It may not boast a tenfold increase in the recent past, yet it is not a risk-prone investment. Instead, it is dependably solid. The next dividend stock that you should consider is ExxonMobil. A well-rounded portfolio should never overlook the energy sector. Investing a small portion of your money is important. Doing so can provide long-term benefits and help you diversify your investments further. The energy sector is up by an impressive 30% this year, while tech stocks have dropped by 30%. This unique situation provides a certain degree of security and stability. It is always advisable not to put all your investments in a single sector or company. You should diversify your portfolio, which includes stocks from the tech, banking, and energy sectors like ExxonMobil, which pay attractive dividends. You can buy a stock of ExxonMobil for $116.94. For each share, you will get $3.64 of dividends per share annually, giving you a dividend yield of 3.11% yearly, which is quite attractive given the current market conditions. The third dividend stock is from a railroad company called Union Pacific. people tend to overlook the importance of railroads, viewing them as relics of a bygone era. Today, they continue to play an essential role in transportation. Investing in a railroad may seem strange, since most U.S. railroads have already been built. In fact, some of them have even been shut down and replaced with alternative forms of transportation. Union Pacific provides an excellent dividend yield of 2.61% on their annual stock, around $5.2 per share. The market price per share of this stock is $199.47. This is why railroad stock has become so popular among investors. Hey there! Are you enjoying this video? If so, don't forget to like and share this video. Your subscription to this channel would also be helpful for you to learn more financial topics. And if you want to learn similar topics like this one, hit that subscribe button. But now let's continue the video. The fourth dividend stock that you can invest in is JP Morgan Chase. JP Morgan Chase is the biggest bank in America, and its 2.83% stock dividend yield makes it an attractive option for investors. You'll receive around $4 in dividends per share over a year, making it both profitable and a secure choice for your money. An attractive 2.83% payout may seem low for dividend stocks right now. However, given the current market conditions, it's one of the best choices for dividend payments. You can purchase your JP Morgan Chase stock at $141.40 per share. JP Morgan is a desirable investment for several reasons. If one held 100 shares at a dividend rate of $4, they would receive $400 in dividends annually. This payout and other advantages make investing in JP Morgan an appealing option. If you have 100 shares and multiply it by 10, you now have 1,000 and can expect a yearly return of $4,000. At 10,000 shares, the expected annual return is a whopping $40,000. This shows how quickly your earnings can increase. Let's talk about the next dividend stock that you should have in your portfolio. It's a company called Air Products. Air Products pays around $7 per share every year in dividends. This works out to a yield of 2.43%, comparable to JP Morgan's current yield. Buying this stock will cost you $287.78 per share. Air Products is a Pennsylvania-based company, primarily serving industrial and manufacturing customers by delivering the necessary gases. It's not directed at the general public and provides a secure and reliable source for specific necessities in this sector. While they aren't the only ones, they are making significant progress in the hydrogen and helium industries. They are taking the initiative in these markets. Even though their share prices have dropped by 15% this year, these companies are still generating billions of dollars in revenue and boasting considerable profit margins. Air Products stocks currently offer an annual dividend return of approximately 2.43%. This means that owning 100 shares can generate $700 in dividend income per year. Let's move on to the sixth dividend stock that you might consider including in your portfolio. And it's one that you might be pretty familiar with, which is PepsiCo. Pepsi has been a longtime rival of Coca-Cola. We don't need to review what Pepsi does here, so let's discuss its dividend instead. The company gives out a total of $4.60 in dividend payments annually. The total payment of $4.60 is being distributed into 4 equal quarterly installments. You can divide the amount by 4 to calculate what you'll receive each quarter. Its annual dividend yield is 2.49%. The beverage industry is dominated by 2 major companies, Coca-Cola and Pepsi. Whenever a new entrant into the market appears, the 2 giants are quick to buy them out, leaving hardly any chance for competitors to grab a market share. It's not uncommon to see that most of the supermarket's beverage brands are Coca-Cola or Pepsi under their portfolio. As such, it provides security and reassurance to many people who choose them. Waste management is the last stock you should consider having in your portfolio that pays a dividend. The annual dividend per share is $2.80, which amounts to around 70 cents every quarter. The yield rate of 1.69% is not exceptionally large. However, it is more than enough to feel secure in this industry, even during economic stagnation. Although yields may not be as high as 10%, this sector can be considered relatively safe compared to others. Everyone needs to pay for waste management services regardless of circumstances. People cannot escape throwing their waste, trash, and recycling in the backyard, so waste management is reliable. This makes their service invaluable, and there is no doubt that it will continue to remain so. Republic Services is one of its competitors. Aside from a few local competitors, they have solid control of the US marketplace. All in all, they have an impressive foothold in the industry. Many companies are conducting research and developing projects in fields like biofuels, investing heavily in research and development. This is why dividends may be slightly lower than average, despite still having considerable profit margins. The stock has been performing exceedingly well for the past 10 years, even when it was at $30 a share. Currently, it is trading for over $100.65 per share. These 7 dividend stocks can offer a steady income of $1,000 every month. You can invest in them with confidence. If the stock market takes a market crash, many investors will most likely still buy into these stocks as they are proven to be reliable money makers. Furthermore, these companies have the potential to weather rising inflation costs. Investing in the stock market is a long-term process. Over time, these types of dividend stocks continue to grow and improve in value. So, when investing in the stock market, be patient and watch your assets grow over time. Thank you for watching. Don't forget to like and share this video. To be more knowledgeable about financial topics, make sure to subscribe to Financial Flipside and hit the notification bell to get alerted when new videos are posted.